Welcome to Around the Horn in Wholesale Distribution with Kevin Brown and Tom Burton. Sponsored each week by LeadSmart Technologies, Tom, Kevin, and their guests review the news of the week and dive deep into the topics impacting manufacturers, wholesale distribution, independent sales agents, and the global wholesale supply chain. Whether it's M&A, SaaS and cloud computing, B2B e-commerce, or supply chain issues, we peel back the onion with our guests into the topics that impact your business the most.
Beautiful. Welcome to our live audience this morning. Great job, Tom.
Yeah, we've got a big crowd today. Big crowd.
That's right. Alex, my fun is Tom's got this, I don't even know how that thing works, but he's got like Jim Cramer's, gong and cheering and stuff, little tool there. And I love it because the most fun of it, that laugh track, right?
Amazing. That's how you know you've gone big time. You've got your own laugh track.
Right. What I enjoy most of it though is not the laugh track; it's the look on Tom's face because he's just got this like little kid grin, having a great time, and so brings back memories when Tom and I were little kids together. So it's kind of fun. So, Alex, how are you today?
I'm great. I'm excited to be back on the show. Lots to talk about. Can't wait to get into it.
Well, that's wonderful. I appreciate you coming back. Is this number 2 or number 3 for you? I think it's 3.
I think it is 3. Yes.
All right. Well, we're appreciative of your joining us and your insights. So we'll kind of kick off our show this morning. We're going to talk a lot today with Alex and gain his insights on some geopolitical matters, some economic matters. You're one of the people that I've had an opportunity to meet and work with over the years. That the amount of data that you can store in your head and the comparisons that you can do on the fly are astounding to me. So we're looking forward to that today. But I'm Kevin Brown. I'm here with Tom Burton, my lifelong friend and co-founder of our company, LeadSmart Technologies. And we get together every Friday, unless someone is on an airplane in a hospital or on a planned vacation, is kind of the mantra that I've given to this. And we chat about the news of the week, of what's going on in the economy, supply chain, geopolitics, M&A, AI, technology, robotics, sales, marketing, e-commerce. And we bring all of that news of the week together and relate it back to how that impacts wholesale distribution and manufacturing, which is the audience that we've developed our show Around the Horn in wholesale distribution and manufacturing for. We do that through the source of a newsletter that we publish every week. That newsletter has the exact same title as this show. And we send that out to, I don't know, now we're 11,000, I think, people roughly. And send that around the world to people who want to keep on top of things and get a recap of what's gone on this week. So we do our show based upon some of the articles and the key topics that come out in that newsletter. If you're listening on the recorded podcast, which would be Apple, Spotify, Amazon, Odyssey, wherever that might be, you won't be seeing these 3 handsome faces, nor will you be seeing the newsletter that will pop up on the screen here and there. And so if you would like that newsletter, you can get it simply by sending an email to hello@leadsmarttech.com. We'll make sure our team gets that out to you. You can also go to the website for the show, which is www.aroundthehornpod.com. Or if you're active on LinkedIn, you can certainly go to the LeadSmart Technologies page. On the left-hand column, you'll see newsletter, and you can click for that, and we'll share that with you right away. Additionally, you could search on LinkedIn for Around the Horn in wholesale distribution and manufacturing, and you'll see the newsletter pop up in the page for the show there as well. So lots of ways to get that. But we would look forward to having you join us. One thing we always ask, if you like what you hear on the show each week, tell your friends. If you're listening on Apple or Spotify or YouTube, the best thing you could possibly do is hit that subscribe button and follow button. If you're on Apple or Spotify, leaving a review is a great help, and that gets that in front of more people. Most weeks we're in front of 6 to 8 countries. We get downloads in that are enjoying the show, so we're appreciative of everybody that's out there that's stuck with us. Today is number 186. So I don't know if I'm proud of myself or ashamed of myself that I've been doing this for so long with Tom. But we couldn't do this each week if we didn't have the sponsorship of the company that Tom and I work for, LeadSmart Technologies. At LeadSmart, we've developed what we've defined as a enterprise growth platform. And we take and help wholesale distributors and manufacturers both unify silo and fragmented data from around their business. And we bring it into a single data point that we've developed, again, for distributors and manufacturers. And we use tools like what we call a sales enablement tool and a smart CRM solution and many other solutions, all built within that enterprise growth platform, where now we can look across the business at data that might be in a data lake or a data warehouse, ERP data, marketing automation data, e-commerce data, and then of course CRM data as well, where we can track interpersonal journey that your customer takes. And now we're looking at customers across their entire journey. And that's when we apply the AI to that to get smart decisions that come out of that, where we can send push alerts to cell phones of salespeople, purchasing managers, operations people, to notify them of churn risks within the business, growth opportunities, product categories that aren't being sold, products that should be recommended, emails that could be sent out, and so forth. And so we look at it with the view that right now most wholesale distributors and manufacturers are working within many silos within their business. And within those silos, if you decide to start applying AI to that, what do you get? You get siloed AI in that setting. And so we're trying to help people maximize understanding their customer journey to benefit all facets of their organization. So if your company is looking to continue to digitally transform, trying to figure out which way is up with what to do with AI, we would love to talk to you. Tom, before we jump into the news though, Alex Chausovsky, our good friend, we appreciate you being with us. You launched your own new firm early this year, or was it late last year? Beginning of the year?
Early this year, yeah. Starting January 1st. The firm is called 3DM Consulting, and the 3DM is an acronym that plays a little bit on this idea of data-driven decision-making. So 3 Ds and an M, that's where that comes from.
It's not siloed data, no siloed data?
No siloed data. No, it's all interconnected. What a tangled web of data we weave. Excited to give this a go. It's been a long dream of mine to be my own decision maker and to have the control of all of the key aspects of the business. I've been ramping up to this point for the last 5 years or so, but I'm excited to get going. It's nice that it coincided with such a tumultuous time in the world, because obviously people want to know how to react, how to plan, how to strategize around this. So very, very busy to kick off the new company, and very happy to do that. So thanks for giving me the opportunity to say that.
No, of course. Well, but let's dive into that a little bit. Tell us a little bit. I'm just kind of looking at your LinkedIn page here. Information applied correctly is power. Love that. By the way, I'm clicking the follow button right now. I'll have Tom do that, and we'll ask everybody to check you out with 3DM Consulting. But define what you really do for us, and that'll give kind of our listeners and guests that we have with us today kind of some little bit of feedback and insight. I think I first met you hearing you speak live at a conference, and I know maybe you can tell us one about 3DM and then about your speaking engagements and so forth, which it seems like I've never met anybody that does as much as you do.
Yes. I do spend quite a bit of my time on the road. Do somewhere between 75 and 100 conferences a year for a variety of trade associations, their annual meetings, for boardroom strategy planning sessions, for companies that want to bring together their sales force or their channel partners and give them some outlook for what to expect over the next year, but do it in a pragmatic, non-skewed way. So they have a third party that's an independent source of data to do that. Which is a really, a significant pleasure for me, because I feel like it actually makes a difference for folks that are struggling to understand what matters and what doesn't. And I guess that's the point of, the applicability of information. There's so much of it floating out there. It's hard sometimes to know what is just noise and what is actually important that you should be acting upon. So I try to kind of cut through the noise and really get at the heart of the meaningful things that CEOs, business owners, decision makers of all sorts should be paying attention to. I do that in a few different areas, ranging from the economics, as you mentioned, and market development, to talent strategy and things that are more on the HR side. And then most recently, the thing that I'm most proud of, I think, with the new business is I actually have a younger brother. His name is Eugene. He is a foreign policy analyst at a think tank in Washington, D.C. And together we have joined forces unofficially. His company is called New Lines Institute, but we are basically focusing on the impact of geopolitics on business. And so we have a joint keynote that we develop We're putting out forecast reports and analysis of how those geopolitical forecasts is going to affect the business environment, and everything from pricing to inventory levels to supply chain and logistics issues, basically giving folks an idea of what they should plan towards, right? I think one of the key elements in this particular environment is not having a single strategy, but rather being prepared for a variety of different outcomes. But when you're doing that, you don't want to just randomly prepare. You want to have some sense of directionality. And that's what Eugene and his team at New Lines provides. And then I lay on top of that the business implications, which is a really nice 1-2 punch. So as you can see, it spans a whole spectrum of coverage, but all of that information, if people can apply that correctly, will help them make better decisions over time.
That's great. So you work with large corporations and help them drive strategy and understanding of what's going on now and what's coming next is a big part of what you're doing, right?
Yeah, I mean, we do certainly work with large corporations. In particular, we do some crisis simulations where they actually get to practice decision-making in a low-risk environment. But I would say the majority of my clientele tend to be the small and medium-sized businesses, right? Because the large companies, they have dedicated teams that look at geopolitical risk, that look at all of the forecasting and things. It's the small businesses where the CEO is also the CFO and he's also trying to make HR decisions, and they're underserved, in my view, by all of this stuff. So that's where we tend to focus most of the time.
That's great.
Well, there's not a lot of geopolitical stuff going on, so you must have a lot of spare time on your hand at the moment.
Yeah, it's a boring world out there, Tom, for sure. I wish something would just actually happen. But wait,
we need somebody to tweet something or to put something out there that we could. Anyway, well, let's get to the news. Hey, I wanted to say good morning to Bob. And Bob, we're not taking my toys away. Those are my highlight of the week. And good morning to Dan as well. And if anybody else is listening, please jump in, say good morning to Alex. I think we're going to have a fun show today.
I think the interesting thing, Tom, about Bob here commenting in the LinkedIn comments there is about taking your toys away with your laugh track thing there is, will you remember to use any of those again throughout the show?
Yeah, I'll remember.
Will you? Okay. The Gong, right? Okay. Alex, you might be too young to remember the Gong show.
I am a purveyor of history, so I do recall watching some episodes. But yes, it was not in my time, especially considering the fact that I came to the States in the 1990. That was definitely pre-1990.
And then before we dive into the news here, one last kind of comment about your background, which I'm really appreciative of, is you got your education in Texas. You live in New Hampshire, but you're from the Ukraine, correct?
That's right. Yes, yeah. I truly consider myself a citizen of the world. First 10 years of my life were spent in Kiev, Ukraine, actually growing up under Soviet rule. So the place where I'm from doesn't even exist anymore. I then lived in Vienna, Austria for a while, and beautiful. Then Italy for some time. So got that European flavor, then switched gears, put on my cowboy hat and spurs, moved down to Dallas, Texas, and spent the next 15 years of my life, more than that, in Texas. I got married a Texan girl. My kids were born in Austin. I went to the University of Texas for my undergrad and Texas State for my MBA. So Texas has a very special place in my heart. And then I had an opportunity to move to New Hampshire to take the job with ITR, where I spent over 6 years and just fell in love with the Northeast. Love everything about the outdoors, hiking, skiing in the winters, and really like how different it is and how the seasons are beautiful here. So it's nice to also have a launch point for many of my speaking gigs, which tend to be international in nature. So Boston is a good place to fly to the rest of the world from.
That's fantastic. Great. All right. Well, let's dive in here. So our first segment from the newsletter that we talk about each week is our economy and supply chain section. And we've got quite a bit to talk about with what's going on in the Middle East right now. We had some stock market surging this morning. Oil prices came down this morning. By the way, as a side note, today is Friday, April 17th. It's 9:15 Pacific time. And as we were talking about before we went live today, let's wait 10 minutes and see what happens, right? To Tom's comment earlier about there could be a Truth Social post or a tweet or an X post from somebody along the way in the next few minutes that could change the direction of all of this. So we don't know what's coming next.
Yeah, the market is up. The Dow's up over 1,000 today so far, and NASDAQ's up 2.5%, somewhere in that neighborhood. or somewhere close to that neighborhood. I was saying to Alex before we came on, it feels like the market's getting a little bit over their skis over the last week or two. But yeah, I think, Kevin, I'd be selling maybe some of your Bitcoin, take some profit off the table.
Think it's going to drop again, huh?
Yeah, I think we're getting ahead of ourselves here.
I think just a brief comment on the market. Yes, in the sense that I do agree that there's a bit of a detachment from reality, in the sense that I think the market isn't fully pricing in the disruption that is still coming regardless of what happens in the war, right? Like, even if everything stopped today, we're still going to be dealing with a huge amount of disruption over the next 6 to 9 months. But I will say one thing: if you look at the market's multiples, for example, on the NASDAQ, right? Yes, it's been repriced a little bit, but future earnings expectations are up robustly. And so, like, if you look at companies like Microsoft, their PE ratio is somewhere in the low 20s now, which is, a far way from kind of that peak fervor where we were looking, the NASDAQ overall is in the 30s. So I would say that there are some good opportunities out there as long as you do your homework.
Microsoft reporting earnings next week, which will be a big one to see if that holds up. But anyway, back to the news here. Kevin, where do you want to start on this? I know.
Well, let's kind of, dive in. Maybe we should just hit the first thing that's going on right now, just as we kind of start talking about, I think, our first article that we have here talks from CNBC from a couple of days ago, talks about wholesale pricing rising in March, much less than expected. But then we're seeing some different things that we can all feel and we're expecting coming out of this month. And it's something we were kind of starting to talk about earlier is, we were looking at a map and we'll get into what's going on in the Middle East in a few moments here, and we can look at that map again. But, Alex, you made a great point, right? That they were talking this morning about the Strait of Hormuz being fully open and Iran acknowledging that, and the markets went up and oil prices came down from that. The question is, are the ships moving? There's a big implication here. I made the comment in our pre-show discussion before we went live, as I mentioned, is that, I think most consumers, and I just keep going back to, I was getting gas a few weeks ago, and a woman at the pump next to me started going on and on about, we can make all this gas in the U.S. and why is the prices up, and don't we have supply here? And the president says we have lots of fuel, and most people are thinking about the immediate economic impact to them. And what we probably saw early on was some of that was, fuel or oil companies saying, hey, I have an excuse to raise prices. And maybe I'm preparing for myself for what could be coming. So I think that's what most people are thinking about, but we're not necessarily thinking about the downstream. And we're starting now much more down the stream, right? Where, hey, you know what? People are planting different crops because of the price of fertilizer. That's going to impact food prices later this summer as opposed to right now. Heard yesterday briefly that the majority of Europe has about 6 weeks of jet fuel available right now. What is that? What happens with all of that? And so I think that might be a nice point for us to talk about, maybe get some of Alex's opinions and thoughts on this related to that downstream component of what's going on right now.
Yeah, so much to unpack there, Kevin. Let's start with the article itself, right? So sure. I think it's an interesting testament to the difference between reality and expectations and how often those clash, right? So it says whole prices rose 0.5% in March. That's for the month of March, right? Specifically that 31-day period, much less than expected. Well, the expectations were human contrived, right? People were looking at the war saying prices are likely going to rise a lot. The expectation was for a 1% increase over the course of the month, right? Instead, it only rose half as much. Well, what that headline does not allude to is even if it's half as much at 0.5%, you annualize that figure, that's 6% inflation right there. And beyond that, we have currently PPI, the producer price index, up 4% year over year. So, we're drifting further away from the 2% target of inflation, right? It's highlighting the fact that the cost of business will continue to rise. And of course, all of that trickles down to the listeners from an importance perspective, which is you're going to get squeezed on your margins regardless, right? When you're talking about inputs and components, when you're talking about Cost of labor is going to continue to rise. Logistics and transportation costs, right? I mean, let's touch on that for a second. So you talk about the price of gas at the pump. Most people don't realize, but oil prices are only about a third of the price that you pay at the pump. The other two categories being the refining costs and the transportation costs to get that fuel to the pump. So
and then the People's Republic of California, where Tom and I live, taxes.
Taxes, of course. Taxes is a major component. It really the big difference between a place like Texas, where it's a very low tax environment, or New Hampshire, where I live, versus California. That being the difference between $4 gas and $6 gas or $7 gas, right? I think that the other thing to consider here is how that price increase at the gas pump is going to affect the specifics of the distribution community, right? In particular, what people don't pay attention to a lot, unless you drive a really big truck, is the price of diesel. And the price of diesel is a lot higher than the price of gas. I think it's like somewhere between $5.50 and $6 a gallon right now. The implications of that are so profound. So, for example, a lot of the shippers in America are owner-operator. They're small outfits, a couple of trucks, maybe one guy driving a set. Mm-hmm. They are expected to front the cost of gasoline and get reimbursed back. So it becomes very quickly a cash flow issue. Can you afford 50% higher diesel prices when you're putting in hundreds, if not thousands of miles? And the risk here is that you could have a lot of the smaller trucking companies decide it's not worth it to me right now. I'm just going to park and wait for the diesel prices to go down. So you've got all of this capacity that could potentially be removed from the system, pushing costs of logistics and transportation up just on the supply-demand kind of angle. So many ramifications down the stream from just the price of oil fluctuating.
So, Alex, what's your thought on, let's assume for a minute that the news from today is true, that the strait is going to be opened, ships are going to start coming through. We'll show in a second. Certainly, there doesn't seem to be a major flow yet, but let's assume that starts to happen. What is in your mind, the timeline before there's maybe some normalization again on fuel prices, right? For that guy driving that truck, right? Is he parking that truck for a week, or is he parking that truck for a month or 3 months, or potentially indefinitely?
Yeah. So again, there are layers to that question, Tom, that have to be addressed in order to provide a good objective answer, right? So I think first we have to recognize that prices in general tend to go up much faster in response to news than they come down.
Like a rocket, they fall down like a feather.
Right.
Yeah.
A lot of that price increase, whether it's this kind of geopolitical upheaval or tariffs, gets normalized into the system and becomes very sticky. It does not go down nearly as far as it has come up, right? So that element means that the ramifications of all of this will stick around for a long time to come. That doesn't mean that guy will park his truck for a long time, but just he will be feeling the impact of this for some time. Beyond that, I mean, we've had damage to a lot of critical infrastructure in the Middle East that is not just going to be undone overnight. For example, in Qatar, 2 LNG liquefaction facilities were bombed. The estimate is it takes 5 years to rebuild that. That takes supply to the global market offline completely, for that period. So in the big scheme of things, that's roughly speaking 2% of LNG that's offline for the next 5 years. Now, that might matter a lot more to the Japanese or to the South Koreans that are importing that than it matters to us here in the US. But at the end of the day, the oil market is globally traded, right? Oil, natural gas, diesel, jet fuel, gasoline, all of these things. And so as a broad-based measure, we're going to see these price escalators be very, very sticky. They're going to maybe not remain at the peak levels that we saw in the initial response, but right now, certainly my expectation is this is a several quarters worth of unwinding that's in front of us, not weeks or a month or 2 months.
Well, and I think, Tom, what was the comment you made, Tom? Go up like a rocket and come down like a feather. Is that what you said?
Yeah.
And I would add to that come down to a feather, like a feather, but never touch the ground. Because typically when you see these types of spikes, you never get back to, I say never, but it's common that you don't ever get back to that floor that you had been at, right? There's this gradual increase.
I will say, again, I'm always looking to be objective and look at things from multiple directors. I want to remind people that we entered 2026 with a generally expected oversupply situation in the oil markets. We were expected to have a lot more oil pumped and delivered than there was going to be demand because of the slowing economic environment. Right. So, you've got these opposing forces, and it's very difficult to ascertain at any specific point in time how much of each force is acting on it. I do think that there's going to be some long-term downside pressure because of that oversupply versus market demand, but it's going to be milder than any kind of disruptive forces like what we're seeing right now. That's my view.
Seems to be there's like a little bit of conflict, I think, that goes with this as well when we look at, producer price versus the consumers in this setting, right? There's they rose 0.5%, right? But the CPI jumped 0.9%. So I would assume that's suggesting that the manufacturer side, the producer side of that is buffering as much of this as they can. We're kind of seeing a little bit of that from the tariff side of it is like, can we afford to not pass everything on? So there's a little bit of like conflict that we don't see if we look at these two numbers completely separately.
I think from the supplier, the producer perspective, there's this kind of background consideration of we have to be careful in terms of not destroying demand to any significant amount, right? And so, you talk about tariffs. On average, it takes somewhere between 9 and 18 months for a tariff to work itself all the way through the system. So in that sense, we're only about halfway in the ball game of getting those initial tariffs from 2025 filtered through to the economy. So we're going to have inflationary pressure from tariffs continue to come in 2026. And that's because, the companies are going to be less willing to continue to absorb some of the hit of that, right? Most people are like, well, but Alex, what about the Supreme Court? They made the IEEPA tariffs unconstitutional, right? That's true. But the administration pivoted away from IEEPA about 6 months ago, focusing on Section 232, more recently on Section 301 tariffs, which are country dumping specific, right? So my messaging around tariffs is don't expect the impact of tariff-driven price increases to go away. In fact, they'll likely exacerbate over the course of 2026 as new Section 232 and Section 301 tariffs come into the play.
It's great you shared that. That kind of pivots us, Tom, into the tariff discussion, which is great, is that we've been talking about this since, it's funny, I'm going to be in at a buying group, the affiliated distributors, one of their network events Monday and Tuesday in Indianapolis, and then I'm heading up to Cleveland for a trade association event. And in that key topic last year, I was at the Industrial Supply Association event, and in fact, we were talking about our mutual friend, Taylor St. Germain, earlier before we jumped live with ITR Economics. And Taylor's been on the show with us as well, and your former colleague and friend. And Taylor was speaking right after the closing speaker, which was Brian Wild. Closing interview, I should say. Taylor wrapped up the event, but was with Brian Wild from the National Association of Wholesalers, describing what his expectations were because it was Liberation Day when we were there. So we finished up, I think Taylor finished up at like 1:30, and what was it? 4 o'clock, we were in Nashville, and 4 o'clock Eastern, I think, is when the president came out, and it was even much more than we anticipated. Well, since that moment, every week on this show, we've been talking in depth about and even maybe some wagers back and forth about whether the tariffs would be overturned or not. And I think if you really look through this and think through it from the start to finish, is there was no way that the administration was not backstopping with their other statutes that they had available to them. And there's 3 or 4 of them, right? They've anchored on, was it 203, I think, that you were just mentioning, right?
232 and 301.
Yeah, 301, I'm sorry. And so there's many more bullets left, and tariffs are not going anywhere.
Yeah, no, for sure. So just to kind of expand a little bit, Section 232 goes through Congress. It's product category oriented. They're basically looking at subsidization and unfair practices of foreign importers. Are they being supported by their governments? Is there, appropriate tax policy in place? Are they getting free loans from the government to stand up production? So, it's really targeting kind of the low-cost producers of the world. And I think for the distribution sector, one of the biggest ones that's coming down the pipeline is the robotics and industrial equipment one. In any industrial equipment category is likely to see some level of tariff imposed upon it. Mm-hmm. And that's before you start factoring in the other category, which I mentioned, Section 301, that's country-specific anti-dumping tariffs, which are also going to be in place. So I just don't see a scenario where we kind of shake that off and go back to the pre-tariff environment that we were in, to a large extent, many years ago, right? Because if you look at the Biden administration after President Trump's first term, Biden also did not get rid of tariffs. So this is not even a political thing. It's a U.S. government action has kind of favored tariffs as a means of, achieving some of its objectives, which, you can agree or disagree with that. But I think understanding that notion that in general, the U.S. government is pro-tariff is a sensible thing to do as a leader.
Well, it's how the country funded itself up until 2000 or 1920-ish, something like that, right?
Taxes, yeah. Yep. Go ahead, Tom. There's an article here. It says federal court hears new case against Trump's latest global tariffs. The U.S. Court of International Trade, which I believe was the same court that heard trades illegal before, heard oral arguments in an attempt to overturn the temporary tariffs. I assume those were was it Alex, Section 150, the ones that were implemented right after?
Yeah, the 10% that's across the board that's in place right now.
So is this going to be is this going to be a continual revolving door where, okay, here comes a new set of tariffs or under a new premise or a new statute, here comes the lawsuits back to the thing, and it just continues to be this sort of revolving door?
I mean, I think the expectation that tariff volatility is going to continue is an absolute, right? I don't see any scenario where we are, in a static environment. Yes, they're going to continue to try to pass new things. Some of them will make it through. Some of them will be rejected. It was not the International Trade Court. It was, at the end of the day, it was the Supreme Court of the U.S. that ruled that the IEEPA tariffs were unconstitutional. But it doesn't really matter. I mean, the idea is the government is looking for a variety of ways to leverage this anchor, and they're being successful with some, not successful with others. But on a holistic perspective, it's really having a major impact, right?
Which then takes us to our next favorite topic, at least, is tariff refunds. Right. So it looks so. Alex, I don't know if you know, but we have a little bit of a bet that we made a few weeks back. I said that tariff refunds, people would start getting refunds before September. Nick Periclay, who was on the guest that day, he said November before the midterms, and Kevin said I think Q1 or March of the things there. The latest article here: tariff process may take 60 to 90 days. Instead of the original 45 days. And then there's obviously, and we've talked a lot about this, right? Who gets the refunds, but are they the ones who are really entitled to the refund, right? Especially if the costs were passed down along the line and so forth. Would love your thought, Alex, on just at a high level, the refund process in general. And you're welcome to jump in on our bet if you'd like to make a prediction on when the first refund will occur.
I'd prefer you, rather than jumping in on the bet, just saying that I'm right. It'd be easier.
I think he's going to say Kevin has no chance.
Well, so when I look at government action, it's like a contractor, right? Always takes longer and has double the cost as what you're initially estimating. And I think in this case, the goalposts keep moving. The administration has a vested interest in not paying this out as long as possible, right? From a accumulation of interest alone perspective, right? We're talking about $200 billion or something like that. We are trying to fund the war. After all, the latest is the war is costing something in the range of $1 to $2 billion per day. Okay, so keep that in mind. The latest request from the DoD is, I think, like a lot of money, 50 billion, 100 billion, 200 billion. It's constantly moving, but it's a lot of money. So I think that there's going to be progress because there's enough of pressure from the outside to make sure that something happens. But I would bet on the longer term time frame, the 60 to 90 days. If that happens, I will be pleasantly surprised. Honestly, I do see the logic of the argument to say they're going to want to give some of the money back before the midterms, or at least have some evidence that that process is unfolding from a politics perspective. But the implementation of this is going to be extremely difficult for companies. You've got to have crystal clear, absolute track record of documentation. You also have to file a bunch of forms. You have to make sure that those forms are filed correctly. There's probably going to be some kickback of the forms. Oh, you missed this field, or you filled it out incorrectly. You got to kind of resupply that information. So I would say in a optimistic scenario, it's before November. I think more likely we're talking about late in the year, maybe early 2027. That would be my view. And to the really the matter at heart here is it's only surface level kind of lip service that's being done, right? It's the initial tariff that's paid at the border. What about all of the other companies downstream that were told, oh, we have to raise our prices because of tariffs? How are they going to get any kind of
That's what this article is about here, right? That's what this article.
Have I ever told you how smart I think Alex is?
Yeah, well.
That's why, Alex, I've been saying it's the downstream stuff, right? I mean, we work so much at LeadSmart with, HVAC distributors, plumbing distributors, electrical distributors, building materials, so forth. And it's like, what my thing has been, what do you, and what triggered this deeper conversation for us a while back was when Costco filed the lawsuit even before the Supreme Court had ruled, right? And there's a Costco at the bottom of the hill from my house. Do I get to go in and say, okay, here's all the things that I bought. You got this money back. I want my share. But I think where it really trickles through is when you think about, okay, let's just use as an example, Carrier HVAC's units, right? Paid the tariff on those coming in, right? Now they raised the price on that to their distributor. But how did they, and to your point about documenting things, right? How did they raise the price? Is it a line item on an invoice that says it's tariff related? Or did they just say, our prices are up, here's our price increase, right? But if they put that tariff line in, and then they go back to their having raised the price that way to the distributor now can track that back and go back and say, okay, I want this because you said this was tariff related. But if they just did a price increase, well, what happens? But then if the distributor gets the increase, the contractor pays the increase. I'm working from home where I do the podcast this morning. There's a wonderful, beautiful woman on the other side of the wall from me that has stacks of things from the roofer, the carpenter, and the painter for the work we're getting ready to do on our home. Well, guess what? Now that just trickled to me. Right. Yeah. And where does that play out? Now, Tom has always had the position, which is, it's not wrong. It's just, that's just how it's going to be. Tough.
Well, the person who is entitled legally to the refund is the importer of record, whoever that may be. Right. I agree with you that the importer of record likely passed those costs down all kinds of different directions. All I'm saying is I don't think that fair is necessarily a key part of this equation.
That's a good way to put it. Yeah.
Right.
There's no mechanism for the downstream stuff. There's no system that you can even use to get credit for that.
Mm-hmm. Right.
I think one other important thing, because you brought up distributors, right? In the case of distributors, most of the time they specifically said, we do not want a line item increase because it affects the value of our inventory. If you were to unwind that,
right? Yeah, you're right. Yep.
Right. So from a distributor's perspective versus someone like an end user or an end customer,
right?
They would have specifically said, just do an across the board price increase. We'll pass that down to our own customers. And that doesn't affect the value of our inventory the way that a line item increase would. Right. So there's all of that consideration to keep in mind.
Yeah. Well, I do think it's going to be an interesting thing for us to see is what comes out of this with Customs and Border Patrol. I mean, they've got these portals and things that have been set up and so forth. I would, I'm at 2 trade events this coming week, and I think I'm going to ask some good questions about specifically if some distributors will be. First event I'm at is only distributors. Will be, are they having discussions now with their manufacturers to say, hey, have you filed for?
I guess he froze.
Yeah, the question.
And then secondly, with that is what can they do from a standpoint of, I think I paused there for a minute. What can they do at that standpoint from the manufacturer side of it? What are they going to come up with?
Yeah. By the way, I'll be at the ISA event. Just very briefly, I'll be delivering a commentary on the impact of the Middle East geopolitically on the business side of things at a breakfast at 7 a.m. on Tuesday morning. So if you get a chance to go to that, it's like the executive network session that they're having.
Yep.
So if you're in attendance, I'll shake your hand.
I will be sorry to miss you. I will be on my way there because I'm speaking at an event myself in Indianapolis on Tuesday morning.
Got it.
Evan, your video is frozen.
Yes.
Your audio is fine, but your video is frozen.
Nobody comes for my pretty face.
Yeah, understood. Just kind of wrapping up the tariff and the tariff refund. I was thinking back, if you remember even about the EIDL loans during COVID, and all and I remember that, and we ran into this ourselves. If everything you did was not perfect, right, down to the letter, I think we misspelled our EIN number or whatever, and we could never get past it again. It was like we were disqualified. We weren't going to get the loan, all that. I would suspect we're going to have the same situation here, right? If you are fortunate enough to get it just right and you get in the system at the right time, you have an opportunity to refund. I think if you whiff or you make a mistake or you put the wrong thing, then you're going to get put over to the side, and your chances of you recovering, I don't think, are very high.
Yeah. And to that point, I think it's really important, specifically for those small and medium-sized businesses, to bring in expertise. Like if you have major exposure on this and you stand to get a substantial refund, you better do this the right way the first time. That means get somebody in that does this day in, day out, every day. They have contacts at the right departments and they can grease the wheels a little bit. They can know exactly where the vulnerabilities in the paperwork are. I work with several companies actually that are standing up services like that, in terms of, they basically take a commission of what the rebate is. It's like the people that go back and renegotiate your home price values for you, right? But their incentive is, their interest is aligned very much with yours. The bigger the rebate, the more money they stand to make. But they take a lot of the headache off the plate of the business owner, and a lot of the responsibility for making sure that it gets done right is handled by them. So I highly recommend people like that. Yes, you do have to pay a little bit of money to get that benefit, sometimes more than just a little bit, but doing it right the first time, I think, is going to be key.
Yep. And then I'm sure that they've got some obligations to get it done right, then take that off your plate, and it's probably worth part of that. I'm appreciative of the comment that Jesse made here. He said, as a distributor that has asked these questions of several manufacturers, we've been flatly told, no, there are no refunds coming our way. Okay.
There you go.
I'm not sure how I would feel that way about how my partnership is working with that organization. But, it'll be interesting to see once somebody actually gets some rebates in of what really comes out of that. But I'm thankful for Jesse's comment. I appreciate him being with us today. And
I mean, if on the other hand, right, if in fact there are a large number of rebates that do go to that importer of record, yes, I think the fight becomes even more crazy, right? Because now there's actually real money on the table versus a lot of talk at the moment.
And you have to assume there will be a public record of who received what.
Sure, of course.
Right. And before we jump ahead further, Tom, I wanted to get Alex's thought. One of the things that I think there bears some risk with this, and I think Secretary Bessent has talked about this before too, is what happens, whatever the number is, however many hundreds of billions of dollars. Look, this administration has said deficit down, right? GDP up is the goal. Deficit down, interest rates down, onshoring, right? We have all of these triggers that the administration has talked about. We've just put those dollars back to reduce the deficit. And now what happens is we flood those dollars back into the economy. Have you analyzed or thought it through that much, Alex?
I mean, we have not reduced the deficit to any degree. We're spending.
No, it's not. I mean, it doesn't put a hit at it, but it's the dollars that are now back into the government in that setting. And so the question is, if we flood those dollars back in, is it meaningful or does it matter?
That's a really good thing to think about. And of course, the scale of refunds would have a huge influence on how this actually plays out. But I think that, if we're talking about even half, $100 billion coming back in for, company coffers, I think that there would be some measurable impact on perhaps a tick up in CapEx or perhaps some additional non-hardware investments, right? Productivity tools, software, AI implementation, maybe a little bit less of a desire to cut costs in other parts of the business, via headcount reduction or things like that. So, I mean, it's always a give and take, right, between money going out and money coming in. So, I mean, if there's substantial enough of a return of capital to some of these businesses, you could see that, green light a project that they've mothballed or put on hold, for example. But in general, you're talking about a $30 trillion economy, and we're talking about $100 billion worth of stimulus potentially coming in. It's a drop in the bucket. It's not going to move the needle meaningfully in terms of affecting GDP or industrial production at the top level.
If the number was a lot higher, I read an article the other day about talking about the risk of it being inflationary if the number was much higher. Having some pressure there. So
I mean, again, $100 billion is 0.3% of potential additional economic activity. So very, very minimal impact in my view in terms of overall, business conditions. And at the same time, I think in the inflationary pressure, I don't expect that the majority of the money at this stage of the game would be spent. I think companies are looking at the environment and they'd be like, maybe we want to put aside a little bit of cash for a rainy day. We want to have kind of that safety net underneath in case things do go south as a result of the war. There's a lot of mentality like that out there right now.
Good.
All right. Where do we want to go next?
Well, are we done with our tariff discussion and our economy? And Tom, are there any boats moving through the Hormuz Strait of Hormuz?
Good question. So let's go over here to our map. If you're watching live, you'll see the Strait of Hormuz map here. There's certainly a lot of boats, but I don't see a whole lot of them going through here at this exact moment. But maybe they're all getting lined up right here, and they're all going to charge through like that. Now that it's all over.
I think they should call this the elbow of Hormuz.
Yeah,
it's a better view. Alex, have you been to that part of the world? Spent any time there?
I have, not specifically to Iran or Oman, which are on either side of the strait, but I've been to the UAE on multiple occasions, been to the Middle East in general, places like Israel and surrounding areas. But I mean, it's a very unique part of the world. And what's really interesting about this whole thing is the effect that's had on kind of shattering the perception that that part of the world was super, super safe. Right. I mean, a lot of expats from the US, from Europe, they love Dubai. They love living, in the high rises and taking advantage of all of the glitziness that it has to offer. But, their airport hasn't been functioning normally for over a month now. And I know people that are stuck in the Middle East and they cannot get out right now. So this is going to have very profound effects long term on the perception of that region as a safe one.
And when flights start getting reduced into Europe because no fuel costs, less fuel available in Europe to get out of there, which we started hearing about. I'm looking at the same map. There looks like there's less than 10 ships that are moving at any significant pace right now through there. So that's nothing of significance at this point. So,
well, as of this morning, it's supposedly totally going to be wide open. So what I want with that, I mean, we would. Obviously, things aren't just going to come shooting through, but I would suspect in the next 72 hours, if that was true, this should change significantly.
Yep. There's we'll see. I'm gonna kind of look at this a little bit over the weekend. So anyways, this will be We'll see what the news brings in an hour and what oil prices and the stock market are doing in an hour. Is the stock market still up, Tom?
Stock market up since we started the show, up another 100 points or so on the Dow, a little over 1,100 points today.
Yep.
Your crypto, 77,000 on Bitcoin. Man,
I might take a few bucks off the table.
Yeah.
Okay. Good.
Right.
Why don't we roll into our manufacturing and distribution segment? And there was a nice article that Mark Brohan had written earlier this week about inflation surge puts wholesale distributors in a cost squeeze. We had talked about this a little bit, but we might be able to chat about this a little bit further. This is from our friends at the Distribution Strategy Group. I think, Alex, you were with them for an event a few weeks ago, weren't you?
I do webinars for them on a regular basis. In fact, I think we're talking about one in May. I'll be speaking at their AI for Distribution conference in June. So, long-term friends with Ian. He's a great guy.
Wonderful person.
Nice things about them. Yeah, I actually contribute to many articles. They ask me for a quote or two. Not sure if I'm featured in that one or not, but the idea here is very, very simple, right? Like the impact of everything that's happening kind of happens on a delayed note, and so that's going to continue to come in. The pricing pressures will build, not just from a material side, but as I mentioned earlier, from the labor side, from the transportation side. It's very difficult to identify a point of any business now where there can be significant savings realized, right? Unless you do automation implementation to replace labor or something along those lines. So this is something that I'm always talking about from the stage, which is you have to remember, as a business leader, you're not in business to grow your revenue. I mean, that's a nice side effect, but you're in business to make a profit, right? Yeah. And that's where your focus has to be. So protecting your margins is absolutely paramount this year, probably more so than it's been in recent history.
So, Alex, do you talk? I mean, obviously, there's different ways to protect your margins, pricing, and looking at those things. But do you think that certainly companies have different wide ranges of products with different margins. Even in the same category, you could have products with different margins. Right. You could sell stuff through your buying group, potentially even get a rebate, or which can influence those. Do you see companies spending time kind of looking at that aspect of things, or where are they looking at opportunities to increase margin?
Yeah, I think the best-in-class companies, Tom, are looking at it at that level. And again, it's very important, not just looking at the overall profitability of the business as a whole, but at the product line. And in my view, just as important at the customer level, right? Because each customer you'll have a very different relationship with, and you've got to be assessing it at that level. And the folks that are not where you need them to be in terms of margin, you have to have those difficult conversations. And even if you've had that relationship for years, right? If it's not getting you the profit that you need in order to conduct business, then you've got to sometimes be even willing to walk away, which is not easy, right? But, profitability is the main driver of future success, not top line revenue. So you have to look at it at the client level, at the product line level. Sometimes it's very helpful at the regional level, because then you have like the specifics of the transportation costs or electricity costs in that region come into play. So there's a lot of different ways to slice and dice it. But yeah, doing it at just the overall margin level for the business as a whole is not going to give you the level of granularity that you need to make the right decisions.
We've been doing a lot of work with customers on what they call white space, right? So what are product categories that I could be selling that I'm not, both at a macro level and at a customer level, like down to a customer level. What we're finding, interestingly enough, is a lot of the white space are higher margin opportunities. So they've done really well at selling potentially commodity or something that's more lower margin, and they have a tremendous white space opportunity, not just from a revenue perspective, but a margin perspective as well. And I think there's just a lot I'm seeing it over and over firsthand. I mean, this is like seeing the real live data. I think there's a lot of opportunity to get more intelligent about the margin expansion.
Yeah, for sure. I mean, it's easier to sell commoditized products just because there's an inherent present level of demand that you can tap into, right? So it doesn't require a genius to be able to sell commodities, right? But the higher end products, the high margin products, you do have to have a much more tailored and targeted marketing strategy. You've got to have a very good understanding of who your customers are and how to pursue those customers. You've got to be able to go in there and win their business, take market share away from existing establishments in that space, right? So it's harder work, which is why a lot of people kind of default to the commoditized markets.
Right. But there is a lot of opportunity there. And we've seen, I mean, even like electrical distributors, you would think, well, selling tools, right? Drills and things like that. Those are much higher margin sales than
wire,
right?
Right.
And some of the things that are there. And yet a lot of times the companies that they're selling to didn't even know they sold those types of things there. So it's anyway, I think that we're seeing a lot of opportunity for that in this whole white space growth opportunity that we spend a lot of our time working.
It's one of the, Alex, within our technology, we connect into ERP systems and other systems, and then our technology will take a look at that and say, hey, you're selling these items, but not these items. And by the way, customers like this are also buying these other categories, and the likelihood of this customer buying that is at this percentage likelihood, and then sending push notifications to salespeople's phones that say, by the way, you may want to think about this today rather than just dropping off that $12 part because somebody asked you to, right?
Yeah.
You've got hundreds of thousands or tens of thousands of dollars of white space opportunities. It just popped up in the last month. So it's a big feature that we've got some very, very large distributors that are seeing potentially millions of dollars going to their top line just because of getting a view of what could happen. So,
excellent.
All right.
Tom, where do you want to roll next? Why don't we talk a little bit about AI, the latest news and updates, which is another segment of our newsletter that gets out every week. And I neglected to do this. I always try and do this about the 30 or 40 minute mark of the show, as if you're listening to us on a recorded podcast on Apple or Spotify or whatever that might be. You're not seeing the newsletter that we have here. We would love nothing more than to get you that newsletter that goes out every week to, I think we're 11,000 plus people now, and excited to have that continuing to grow. So if you would like to get this newsletter, we would love to share it with you, where we talk about the economy, the supply chain, M&A, robotics, and so forth. Just send us an email at hello@leadsmarttech.com, or you can find that on our website for the podcast, which is www.aroundthehornpod.com, and or on LinkedIn, and we'll get that right out to you. So CEOs are betting AI will augment work rather than displace workers. I'd love to chat with you guys about this, because something we've thought would be the likelihood of happening, and we're starting to see some of those conversations.
Well, a lot of this has started from and I think this even mentioned here in the article, from the CEO of Anthropic, Dario, who, frankly, I'm getting sick of. He's just, everything is, doom, gloom. We're going to all be eaten up by AI. It probably is a way for him to get attention and for their
it tends to tie to a company event or a fundraising event.
Yeah.
Right. If you look back at that with him, is that has been the sequence of events, is they have an announcement or a fundraising trigger that there is some wild statement that he makes that gets him all over the press.
Well, and even look at the most recent model, the Mythos model, right? That, we can't release this because it's too intelligent, and it will find all of the security flaws, which, maybe there's some truth to that or not. But
P.T. Barnum, right? There you go.
His one of the statements he made was we would have 20% unemployment here, I think by 2030, if I'm not mistaken. I don't know exactly.
2031.
2031. And I've never, the more that I work every day with people on AI and with people on AI, I actually agree with this article, is that the real opportunity is augmentation. It doesn't mean that there's not some automation opportunities, but those automations are not just going to be run by magic, right? You're not just going to turn them on and go, oh, okay, let's just let these things run. And I mean, there's care and feeding involved in all of that. So again, that becomes a form of augmentation, right? Because now there's an individual who's overseeing those things. So anyway, this article was talking about a lot of the, I guess, CEO, a survey with different CEOs, and there's starting to be less and less of or more and more of a understanding that, hey, my AI opportunity is not to go fire everybody and replace everybody with AI, but to actually augment. And it comes back to what was the statement that Jensen made from NVIDIA? You won't be replaced.
AI won't take your job. Someone using AI will take your job.
Right. So
he got that from me. I said it at a conference, and
he grabbed it from you. Yeah, I get it. I figured that was the case. Alex, what's your take on this?
I have three thoughts on this. First, given the amount of events that I speak at, I always ask the very direct question: have any of your businesses laid someone off because of AI? The answer is zero response to that. Right. Now, people do say, well, we've allowed some natural attrition to happen, and we're supplementing the existing people that we have, but we have not gone through the act of reducing headcount because we think all of a sudden AI is going to replace these folks, right? And in general, this notion that AI will push unemployment to 20%, or some people say remove everybody's jobs, right? Like, if you look at the target audience for AI, white-collar jobs, right? The vast majority of white-collar jobs are actually in management roles. And unless you want to be managed by an AI, which none of us do, I think most of the time management is relatively safe from that, right?
I would like being managed by AI because it's so nice when we always, that's a brilliant idea, Kevin. You're super smart.
I think an AI manager would not be as pleasing to you as complimentary.
I wouldn't be paying a subscription to an AI manager, would I?
Yeah. The 20% unemployment to me is so absurd. We have a worker shortage in this country. We have, with now that we've stopped immigration, the projections are that the U.S. labor market will be losing 200,000 to 300,000 jobs a year starting in 2027. There's a great report out of Lightcast. This is a company that I follow, but I don't work directly with them. But such a compelling report. It's called The Rising Storm. Highly recommend people check it out. It's about 10 to 12 pages. Very compelling. Basically, the message is we have to fix the legal immigration system in this country, or else our labor market is in dire straits. We're going to be losing people. So in that environment, to think we're going to have 20% unemployment, I just don't expect that to happen. But I will say the most compelling thing to me has been the conversations I've had about AI with my 16-year-old daughter. Okay. So I was just very curious. And I said to her, how do you and your friends, your cohort, generally think about AI? She said three things that really struck me. Number one, we think of it as a competitor because we're constantly hearing how it's going to take all of our jobs. And so we have this adversarial relationship with it, in the sense that they've actually even coined a term, like clanker. I'm not sure if you've heard this, but it's a derogatory term, anything AI or machine related, because they feel like these things are going to be trying to replace them as, workers, as contributors, as humans in the future. Second element that she said that I was really blown away by is when someone in her circle admits that they used AI to do something, she said, I feel bad for them. As in, like, they were not able to intellectually rise to the challenge and do the work themselves. They had to rely on this crutch of an AI. And so none of them want to admit that they're doing this, and none of them want to hear their friends say that they're doing this. And of course, last one, but certainly not the least, is obviously the environmental impact. I think that generation in particular, Gen Z and younger, very sensitive to the environmental impact. They already feel like we've ruined the world for them, and they remind us of that at every possible turn. So the amount of water, the amount of electricity, the amount of environmental destruction that happens to drive AI, they say, what the people that use AI to answer everyday questions instead of Googling it, and the lack of realization how much more energy intensive one is versus another, are just like, they're doing humanity a disservice in terms of not understanding. So I would say overall, the propensity is, yes, we sometimes have to do this to do a homework project for school or whatever. But if given the choice, their propensity is not to use it. Certainly in the case of my daughter and her friends. And I found that to be so interesting because right now, especially with the fervor of AI in the business world, no one's talking about the flip side of that coin, which is there's a fairly substantial pushback from the younger generations happening on this tech as a general concept. So lots of thoughts on that.
Yeah.
What do you guys think?
Well, I think go ahead, Tom.
Right, is she's in school, right? The expectations of what she is supposed to be doing in school, right, is very different than expectations of what you are expected to do in a business and what you're supposed to deliver, and the fact that there is a financial profitability and a productivity element of what you're trying to do in business. And I could see from an academic perspective those viewpoints making a lot of sense. I'm wondering how quickly they switch when you get into a business environment and the pressures that come with a business environment.
It will be really interesting to see that dynamic. But I mean, I will say that this attitude towards the technology as a concept, is fairly deep rooted at this point. And even if they're mandated to use it in a work environment, it's not going to be because they love it. It's going to be because they're told. And you know what happens when you're constantly told something, right? There's a pushback that happens there. So I think these are issues that we should be exploring alongside the promise of AI and all of the productivity and efficiency gains that is said to be delivering to us.
I do agree with you 100%, or even your daughter 100%, is that we a lot of times use AI in a wasteful or a there are even just the way that we go about building things. There's, kind of traditional deterministic type of ways of doing things. And then there's AI, which probabilistic, which takes more energy, and you don't need to use that probabilistic approach to solving something when you can use a deterministic approach, which is kind of what Google is in a way. It's like if looks for this and looks in the database and so forth. So I do think there is some, and my guess is more and more companies will take care of that for us, right? Is they'll decide whether they should be using the models or should they be using more of a deterministic framework. But I do agree. I think we've, especially in the business world, maybe have gone to the other extreme in some cases. And yeah, what does it take? Like it says for the price of running a open AI conversation, you could charge your phone, basically, in terms of the power that's used. So
I've not heard that before.
Yeah.
It's interesting. So a couple things, right? We're going to wind down here in a few minutes, and
oh man, we're already at that time.
Yeah, we'll let's pull this together in this AI discussion because there's a few other good articles that we have, but in the related to AI here. But a couple of things, right? And I'll throw this out to both of you, and then I'll kind of make a couple of comments. So Bob had thrown in here, he said, what about Oracle laying off 30,000 people to free up cash flow for their AI initiatives? That's one component. The other component of that is then we saw what Dario here was saying, and Tom, I think you kind of nailed it with the doom and gloom that comes from him and others there that are disagreeing with him in that first article we were looking at. But then we've got Elon Musk saying that, we're just a few years away from not needing to work, right? And so I'll throw those two things out to you guys. I have some significant thoughts on both of those, but let's look at that. So I think we're probably in alignment that what we all see, and I would assume, Alex, you work a lot with both manufacturers and distributors in that setting. Steve Levy, that was with us last week from Infor. I don't know if you know Steve or not, Alex. He'll be at ISA next week. Hopefully you get a chance to meet him. He's a good friend of mine and a good friend of our show. He made the comment of some things that Infor is looking to do is, in a perfect world, would love to see AI agents helping a wholesale distributor double their size without adding more people. We think about that similar statement to that at LeadSmart every day is how could we help a wholesale distributor double in size with adding, I don't know that it's without adding people, but with a fraction of what it would normally take because they've got the technology, they can do more with less. So what I'm seeing out there is in the distribution manufacturing world is nobody's talking about getting rid of people. They would love to do more with what they have, or when someone retires, replace them with somebody with different skills. But now we've got one side of that is you're looking at this in the comment here was Oracle laying off 30,000 people, Salesforce laying off a lot of people thinking we can do customer service through AI. And then we've got the other side of that, Elon Musk saying, we just won't even need to work. I'll throw that out to both of you for our last 5 minutes of the show.
Tom, you want to go first?
I'll address the Oracle thing. I haven't read the article, so I haven't dug deep into it, but I think, Alex, you had right. A lot of companies still have a bit of bloat regardless of AI. And I think they're using this as an opportunity to right size a bit on some of the people that they have in the organization. Oracle isn't saying that they're laying off 30,000 people because they're going to replace them with AI. They're looking to free up cash flow to work on other AI initiatives that are there as well. And so maybe those people just are redundant or just not all that important in terms of the grander scope of things. So now, is our people going to, let me just put it this way. Are jobs going to be replaced with AI? Yes. Are some people going to be the victim of that? Yes. But are they going to be able to adapt? Some will, some won't. Right. So I think it's naive to think that there will be no impact from AI, but I don't think it's going to be, as we just talked about, 20%.
Right. Tom, we lost you there, Tom. It might be.
I went on mute, so I guess I figured I'd heard enough.
I mean, most of the layoff announcements are coming from software companies that are investing huge amounts of money in AI infrastructure. They've got to shift spending from somewhere, and headcount reduction is their preferred tool, right? Like you don't hear Walmart talking about laying off a bunch of people because they're trying to implement AI. They fund that through cash flow, through profitability, right? So I think to justify the level of infrastructure investment that has happened, we're talking about hundreds of billions, if not trillions of dollars across industry. Yeah, these high-flying technology companies, of course, they've pulled every lever they can. So now it's time for a bit of a headcount reduction situation. But in and of itself, I don't see that as a doomsday mechanism for the broader economy to be experiencing something very similar. So, I always kind of chuckle. Like I always ask the follow-up question. Yeah, but how much did you invest in AI before you had to pull this lever, right? Are you overextended perhaps on some of your CapEx plans? And so you're now trying to make up for it.
And were you overly bloated with headcount that you didn't need? I would suggest that we're probably so early, right? I think we're in batting practice, not even in the first inning of what the AI future holds for business. And I look at that from that standpoint I think it's way too early for anybody to really say that, we're able to replace all these people with AI. Tom used the term right sizing. I think that's what we're seeing right now is people are using this as a catch-all for what they're doing to manage their business. So let's jump from there. I think we're all in alignment with that. What about not having to work anymore because the AI has taken over the world? I can't even remotely get my head around how that could happen. So thoughts from either of you?
Hey, I'm looking to wrap up here by summer and be retired and not have to work anymore. And the company runs on its own. So that's my plan, just so you know.
So just you or both of us?
You can do what you want, but I'm not going to need to work. So
okay.
I think a lot of us have the perception of who we are tied into our work, even if it's just a job rather than a career, right? Mm-hmm. And so you might not feel like you have to work, but you're going to want to do something with your life. You can only play so much golf or go on so many trips, right? I think one of the really
I'd like to test that theory. Sorry to interrupt you, but I'd like to test that theory for a year or so.
I'll tell you this much. Look at the number for new business formations happening in the States right now. It's double the pre-pandemic level consistently. Mm-hmm. So people are saying, maybe I don't have to rely on that day-to-day thing, but I still want to do something with my life. I want to start a business. I want to explore an idea. I want to build a new product. And so we do see a lot of that happening. So the notion, I think, that we don't work is not sensible to me. People will continue to find purpose and meaning in work, but maybe a little bit less financial pressure and not having to live paycheck to paycheck would be a welcome thing for, I would say, a large part of this country. So, take the best of both worlds there. You can still do things to fulfill yourself, but maybe you can actually not worry about how you're going to make your mortgage payment that month, right?
I guess what I have not been able to figure out yet is in that world that he describes. And I think Elon Musk, as he talks about that, to your point, Alex, he said, unless you want to. I just don't know, how do I get paid then? If I don't...
Universal general income, universal basic income is all of their solution. Right?
Yeah. Okay.
Yeah.
Gotcha. Well, good. Well, that takes us to the... because that could be another 2-hour discussion about a universal general income, right? Which I'm sure we all have strong opinions on. But Alex, thank you for being with us. I can't wait till you come back. So hopefully you're willing again down the road to join us. And these are always good discussions. We're trying to do more and more guests. We've got some more support we've got a pre-show person that reached out to you, Lily, that helped you get ready for things to join us, and got a post-production group, and we're adding to that team right now. So things are going to continue with the show. We've got some cool other folks that are going to be with us for the rest of the year, and some additional show types that we're going to do. In fact, Tom, it might be kind of fun to get Alex in with us sometime. We have a second show that we do occasionally. We started it, Alex. It's called Around the Horn 2.0, which is more traditional podcast style discussion. So maybe we can get you to join a panel or something down the road. But before we wind down, we first want to thank everybody that was with us today, both that was sharing some comments with it. We're really appreciative of the fact that we get those comments coming in for our discussion. Alex, tell us one more time about your business, who you are. So folks that might want to, before you even do that, I just want to really encourage people to follow you on LinkedIn. I'm a huge proponent of trade groups, buying groups, whatever it might be that can benefit your industry. If you're a wholesale distributor or manufacturer and you're not going to your industry events, you're missing people like Alex coming and talking for an hour without Tom and I interrupting him with our silliness. So get involved in that. But Alex, tell us a little bit, and as we wind down again, about your business, how you help companies, and how people can get in touch with you.
Yeah. Thank you again for having me, guys. Really appreciate it. It was a fun episode. My company's 3DM Consulting. Data-driven decision-making is my game, and really in a variety of aspects, whether it's operational, economic, strategic, geopolitical. I'm here to supplement you, to be your fractional resource as an analyst, as an objective, data-driven person. I want to help you make the best kind of decisions. So that whether that's through public speaking or one-on-one consulting, which is what I do with individual companies, I'm here to support you in this tumultuous time. So please reach out. The website is 3dmconsulting.com.
Awesome. Great. Fantastic. Tom, anything to add as we wind down for the day?
Let's wrap it up. I know we've got places we got to get to.
Places to go, people to things to do. Right. Thank you again. The last thing we always do as we close the show out is we thank you for being with us. The one thing that we ask is if you enjoyed the show, jump onto Apple, jump onto Spotify, click that button that says subscribe and leave a review. And that review is the biggest way that we get out to more countries and more places. So we appreciate everybody. We wish you a wonderful weekend. Be kind, be safe, and do good things.
Take care, everyone.
We hope you enjoyed today's episode and our guests. Each week, we try our best to dig into the topics that are impacting your business. So please reach out to us and let us know how you think we can make the show better, or topics you'd like for us to tackle or talk about more often, and even guests you'd like to see join us. We're looking forward to bringing you next week's session, and hope that until then, you stay safe, stay focused, and do great things. If you haven't already, please subscribe to the podcast and leave a review to help others in wholesale distribution get access to the conversation. And finally, please check out our sponsor, LeadSmart Technologies, and their manufacturing and wholesale distribution industry CRM, customer intelligence, and channel collaboration platform. That's LeadSmart Technologies at leadsmarttech.com.